So what's going on, guys? It's another video and another tutorial of my scalping strategy. Now this time I'm gonna show you how I actually traded my strategy. And as always, before we start, make sure to subscribe, to like, to comment. Don't like, don't comment, it's your choice, but make sure to subscribe, to like, and to comment. So let's go. So in front of me I have again the Australian dollar and the US dollar. Now, as always, I like to use the EMAs just so we can determine the trend. And as always, we head here across to the downside, which means suddenly the movement of the stock market changed and we are seeing here bearish momentum. Now, often what I always say and what happens is after we see the 20-day EMA crossing the 200-day EMA, and between this cross here and the cross here between the 50 and 200-day EMA, we can sometimes see consolidation, which means we are going sideways, which would be here. So this is something that sometimes you can find on the daily chart, like here, for example, as well as here, or even here. Now, consolidation patterns are quite often in the stock market, which means you can find them basically, it doesn't matter what you're trading, Forex, stock markets, indices, it doesn't really matter. Now, as always, after finding this consolidation pattern, we go down to the 1 hour chart, and now we wanna draw our bigger support lines and resistance lines, which they are somewhere around here. This is where the market had kind of the most retests of specific areas, and in between we always rallied, went down, rallied, went down, rallied, went down. And now usually when we hit here an area, here we hit it the first time, the second time, now we want to see what happens the third time. Usually we can see a repetition and go down, so we want to look here for a trend down and trade the stock market down, or the other way around would be if we have the first support line here or the first touch and then rallying, we want to wait for the second one, and then at the third one and the fourth one we want to see if we can rally again from the support line here. So we want to then go down to the 5-minute chart and look for scalping options. And the scalping strategy is actually not that hard. Now here we came to the resistance line, and now what we want to look for is the bearish momentum changing cross on the 5-minute chart, which happened here. Here we were on a bullish trend and suddenly we turned down to the downside, which happened here where suddenly the 200 EMA is on top and the 50 EMA is below it, as well as the 20 EMA. But like I always say, the 20 EMA is just an extra special indicator. Sometimes I don't pay that much attention to it, but it really depends what strategy I'm using. So for now we are here at the resistance line and we are seeing suddenly a change of direction, and we are likely going down to the support line here. And as I said, we had this bearish crossover between the EMAs. So when this happens, we want to look for a pattern where the stock market, after having this cross, goes back to the 200 EMA, which happened here on August 6 between 6:50 and 12:40-50. So about 6 hours long we went here and had a consolidation pattern on the 5-minute chart. Now, so we want to look for a retest at the 200 EMA. This is our first indicator, and this often happens at a specific area of support and resistance, which is also something that we want to look for. So here we had this support line which acted as a support area here a couple of times. Here we broke down, and now it is acting as a rejection area or a resistance line, which also happened here. We could go all the way down with this rectangle and see that we had the same support and resistance line here. Here it acted as a support line, and so on. So this is the second kind of help that we need to determine. Now, so we had the crossover to the downside, the retest to the 200 EMA at a specific support area. Now we want to look for a continuation of this trend, and usually our target is always, now we want to enter somewhere around here at the 200 EMA and target the previous low, which is somewhere around here, because obviously if you look at the market, we can always take 2 trades and go here for the bigger support line on the 1-hour chart, which is an area that we might likely retest in a consolidation pattern on the daily chart, because as you see here we went quite low. But if you want to scalp and you use the 5-minute chart here, if you enter somewhere around here, I mean you wouldn't usually, but you would still need about 6-7 hours until you would get your profit, even though you are just scalping. So you don't want to wait that long. You could, but there would be another trade and another strategy. So for now we have this 5-minute scalping strategy. So the next indicator what we are looking for is the RSI, and as always, if we get to the 200 EMA, usually we want to look for a pattern that we want to look for the RSI to be either pretty high, which means it is oversold, or suddenly, like here for example, where it was oversold, which was pretty low, but now we are scalping to the other direction. So we need to look for, we should have looked for a point where the RSI was pretty high, but here it wasn't one. But therefore we could find the RSI going lower and lower, which means we suddenly went below the 50 mark a couple of times, which is another indicator that we will go lower from here. Now another indicator that we want to look at is the MACD. Here we had the same pattern, we went lower and lower, and here suddenly we had the crossover to the downside. So these are the patterns that you want to look at, where you can see a downtrend to the downside. Now for the trade, here around was the cross between the 0 line. So here the RSI went lower, which is an indicator that we will go lower, because we were trading constantly below the 50, or we were retesting points below the 50 mark on the RSI. Now the MACD here had suddenly what is this line? We had here around this area a trend where the MACD suddenly went below the 0 line, which suddenly means that we might see a change of direction as well and go lower, which will be somewhere around here. And now in this phase we want to look for a bearish sign. This could be either this candlestick, this engulfing one, or this bearish sign here. So as always, we want to make it simple and go for a risk reward of 1 to 2. So if we take this short here, we want to take this bearish candlestick and use it as our entry point somewhere around here with a risk reward of, let's make it 2, and we want to go here. Now you could go here for the highest points that we here only retested once, which I wouldn't recommend, since most of the times we didn't break above it only once. But this would be just to make sure that your stop loss isn't or wouldn't get triggered that easily. So you would actually take this highs here, which would be somewhere around here, and which would be roughly exactly your 2.0 risk reward ratio, which would be here. Let me just fix this real quick. So we entered at this bearish candlestick and we went down to take our profit. And you see, when you're scalping, you want to take the first break to the support line, because here we broke to the support line and suddenly we rallied again, and here our stop loss would have been triggered, and after that we suddenly went lower to the 1 hour support line. So scalping is a little bit different, which means we should have taken our profit here, and this is exactly what happened. And this trade would have taken us from 10:30 to 12:30, so roughly about 2 hours, and you would have made your money. And just to prove how easy and simple that is, here is the trade that I took